Turn your financial dreams into reality with just $1,000. Sounds too good to be true? Are you ready to transform that sum into a more significant figure? Stick around as we explore some smart ways to invest your money and grow your wealth. Elevate your finances with WealthWise Insider. Wisdom for wealth builders. Hi everyone! Let's dive into the world of investing. Investing is key to growing wealth. If you've got $1,000 burning a hole in your pocket and you're hoping to watch it balloon into something bigger, you're in the right place. But before you dive in, consider whether this grand is a one-time deal or if you'll be able to keep adding more to the pot in the future. Let's start with the scenario where you've only got a single grand to invest and that's it. You're not planning on tossing more cash into the mix anytime soon. Sure, you've saved up that $1,000, which is already more than what many folks manage to sock away. But here's a kicker. If you're thinking about tossing it into the stock market, you might want to pump the brakes. Here's why. Let's say you plunk your $1,000 into the market and it has a banner year, raking in a 25% return. Sounds pretty sweet, right? Well, not exactly. Sure, that's 15% above the average return, but when you're only dealing with $1,000, that only translates to $250 in gains. Nice, but not exactly life-changing. You might be thinking, hey, what about stashing my cash in a savings account or a CD for guaranteed returns? Well, hold on to your hats because the returns on those aren't exactly going to knock your socks off. Savings accounts these days are yielding a paltry 0.33%. So if you park your $1,000 in one for 5 years, you'll end up with a whopping $1,106. Not exactly the stuff of dreams. CDs aren't much better. Sure, you'll get a slightly better return, around 1.37% for a 5-year term. But after 5 years, you'll only have about $1,068 to show for it. Again, not exactly a ticket to the high life. So what's a would-be investor to do? Well, here's a thought. Why not invest in yourself? As Warren Buffett once wisely said, the best investment you can make is in yourself. So why not spend that $1,000 on something that will help you grow as a person and as a professional? That could mean taking a course or attending a seminar to learn new skills that could boost your earning potential down the line. Think marketing, coding, or any other skill that's in high demand but short supply. The more you know, the more valuable you become, and the more you can command in terms of salary. When considering investment in yourself, it's important to understand the long-term benefits. Studies show that professional development, whether through formal education or learning in-demand skills, typically leads to higher income and job security. Investing in personal growth not only enhances your capabilities, but also increases your marketability, making you a more attractive candidate in the job market. Another option? Use that $1,000 to start a side hustle. Thanks to the wonders of the internet, it's easier than ever to start a business from scratch. Sure, it'll take some elbow grease to get things up and running, but with the right idea and a bit of hard work, you can turn that $1,000 into a tiny little income stream. Of course, if you've got a steady income and you're able to squirrel away a bit more cash each month, there's always the option of investing in the stock market. But here's the thing. If you want to make your money work for you, you'll need to invest smartly. Forget about trying to pick individual stocks. Instead, consider putting your money into index funds. These funds track the performance of a specific market index, like the S&P 500, and offer a way to diversify your investments without having to handpick individual stocks. For those contemplating the stock market as an investment avenue, it's crucial to understand the concept of compound interest and its profound impact over time. Albert Einstein famously referred to compound interest as the eighth wonder in the world, highlighting its power to multiply wealth exponentially. By reinvesting earnings, an investor not only gains from the initial investment, but also from the accumulated earnings from previous periods. This effect becomes more significant with longer investment durations, making early and consistent investing vital. Additionally, choosing low-cost index funds helps in reducing fees, thereby maximizing the potential returns from compound interest. Not sure where to start? Consider funds like VU or SPY, which track the performance of the top 500 companies in the US. Or if you're feeling bullish on tech, check out funds like VGT or QQQ, which focus on companies like Microsoft and Google. And if you're after steady dividend income, look into funds like VYM or SDY. But whatever you do, remember this: investing comes with risks. There are no guarantees when it comes to the stock market, so be sure to do your homework before diving in. If the stock market isn't your thing, there are other options out there. Real estate, for example, can be a great way to build wealth over time. Sure, you might not have enough cash to buy a rental property outright, but you can consider investing in real estate through crowdfunding platforms or real estate investment trusts or REITs. Crowdfunding platforms allow you to invest small amounts of money alongside other investors to fund real estate projects. And REITs offer a way to invest in real estate without the hassle of buying and managing properties yourself. Both options can offer steady returns over time, but keep in mind that your money won't be as liquid as it would be in the stock market. Regarding real estate investments, diversifying through crowdfunding platforms and REITs presents an accessible entry into the real estate market without significant upfront capital. These investments can offer stable returns and serve as a hedge against inflation. They're particularly appealing for individuals seeking exposure to real estate with a lower risk profile compared to direct property ownership. Of course, if investing isn't your cup of tea, there's always the option of paying down debt. By knocking out high-interest loans yearly, you can free up more cash flow and put yourself on firmer financial footing in the long run. And here's a bonus tip. Ever heard of micro-investing? It's a cool way to dip your toes into the investment world without putting too much on the line. Apps like Acorns or Stash can help you get started. They work by rounding up your purchases to the nearest dollar and investing the change. It's super easy and you won't even feel the pinch. Plus, it's a great way to learn the ropes of investing gradually while you build up a little nest egg. Perfect for anyone who wants to start small and see where it goes. So there you have it. Whether you're looking to invest in the stock market, start a side hustle, or pay down debt, there are plenty of ways to put that $1,000 to work for you. Just be sure to do your homework and invest wisely. Your future self will thank you for it. What would you do with $1,000 to start your investment journey? Share your thoughts in the comments below. And don't forget to subscribe to WealthWise Insider for more insights on achieving financial prosperity. Until next time, remember, smart wealth, wise future.